We can see. Okay, David.
All right. Good afternoon, everyone. David Yashar. Happy to be on the Zoom. We are on for our commercial meeting, and we have obviously the one and only Mr. Lee Kleinman, who he's the master of disaster on the SBA lending, and I think a lot of you guys know him already. He's had a kind of one-on-one with you guys, majority of you guys. Guy that really knows it, from A to Z, all the rules, regulations, had a, good amount of background on doing this. I rather Lee get into it, and just that, when it comes to SBA, I mean, he's our first call, me, my team, and he knows that. So without further ado, Mr. Lee Kleinman, please go ahead,
Great.
sir.
Well, thank you very much to many who I don't think is here, but to Kim and David for continuing to allow me to be a part of the SoCal KW commercial family. It's much appreciated. Appreciate the friendship and partnership and spending time with you, whether it's at events or training like this or presentations. And although David was nice enough to hand the floor to me, it is a presentation, but it's also a discussion. So feel free to, stop me with any questions or comments or feedback while we're going through a few slides here. So thanks again. Real quick about myself, I've been in the banking and lending industry for 34 years now. I enjoyed a 30-year career at Wells Fargo, where I did retail and business banking. And about 4 years ago, I joined Business Finance Capital CDC, where now my sole role is to fund the second mortgage portion of the SBA 504 program. A bank provides 50% of the financing in the form of a first mortgage lien on the property, and then I come in as a direct lender for the SBA with a 40% SBA second mortgage. And then, of course, the customer comes in with 10%. All right, so I'm going to be going through some informations here, and in case I deviate to my acronyms and abbreviations, I thought I would share a few of those with you here. So we all know what SBA stands for. Debenture is a Wall Street term for the second mortgage loan amount, because the money doesn't come from my office or the government's office. It actually comes from institutional Wall Street investors. So debenture is the Wall Street term for the SBA second mortgage loan instrument. I work for what's called a CDC. My CDC is called Business Finance Capital CDC. There's about 210 CDCs nationally, and we are the intermediary between you and your customer and the Government Loan Center in Sacramento. So we're not government employees, but we package up the deal, underwrite it, and then we submit the file to the SBA Loan Center in Sacramento, and those folks are government employees per se. Every lender has what's called a credit policy manual. The SBA manual is called the SOP, or Standard Operating Procedure. We call the business the OC, operating company. The real estate entity is called an EPC, or eligible passive company. We refer to the first mortgage lender as a TPL, or third-party lender. And then, as I already mentioned, the loan center in Sacramento is called the SLPC. Recently, the government made life easier for all of us, but more importantly, they made life easier for the borrowers. I think we've all heard of how sometimes people feel the SBA is more difficult, more cumbersome, and I won't completely disagree with that. And that's only because the SBA takes on more risk. So we might have to dot more I's and cross more T's to take on a startup or a 90% LTV transaction. So there's justification in our process, but the process just got a whole lot easier without the value add of their liberal lending policies getting more strict. So what do I mean by all of that good stuff? Well, in the past, somebody could have too much personal liquidity to apply for an SBA loan, because the government's position was if you have all this excess liquidity laying around, you can go ahead and put 25 or 30% down and go conventional. Well, the personal liquidity analysis is no longer effective, and this verbiage is directly from the SBA SOP. And it clearly states that we do not have to analyze the owner's personal liquidity anymore. Now, we do have to look at the business liquidity, but it's very rare that a business has that much cash to where that would be of concern. So this just opened up the door to a lot more borrowers, because in the past, if your post-closing liquidity was more than 1 or 1.5 times the project size, that could be of concern, but that no longer is of concern. The next one that I've listed here is regarding criminal matters and background checks. Unlike at Wells Fargo, the SBA does finance convicted felons. In fact, I've done 1 or 2 since I joined the CDC about 4 years ago. But the client had to go through an exhaustive background check process. If they were a convicted felon, they had to dig up proof that their probation was completed, all the court documents, they had to go get fingerprinted. Then we had to package that up and send all that information to a department of the SBA called the Character Determination Unit. And that could add anywhere from 1 to 3 weeks to the process. That no longer applies. What applies is the following question. If the client can answer no to this question, then we can proceed without any of the court docs, fingerprints, and all that stuff. So sometimes in life, people deserve a second chance. The government realizes that. But if there's skeletons in the closet, we don't have to dig into the nitty-gritty anymore. So that's going to make it a lot easier for people that have some background issues. Affiliated entities. This is when a small business owner has their business and they're also involved in many other entities. It could be an operating company, it could be a real estate LLC, what have you. In the past, we had to collect all the information on all of those entities if our client was an equal or controlling owner, or if they're other relatives, if the combined ownership between them and their other distant relatives equaled equaled an equal or controlling owner. That has gone by the wayside. Generally speaking, now the only time we have to bring in paperwork for other companies is if our individual owner owns 50% or more of the borrowing business, and they own 50% or more of another business entity that's in the same NIAC code, like a similar or related entity. So this just made it much easier for clients that are involved in other entities, because sometimes our process got bogged down because the clients had to dig up a lot of paperwork on all of their other entities. The other thing that caused delays was if you were a franchise or a dealer and had franchise agreements or dealer agreements, we no longer have to collect those. In the past, we would collect them, and if that franchisor or dealer was not listed in the SBA franchise directory, we had to communicate with the SBA to have them added. Then the SBA had to review those franchise and or dealer agreements. And many times there was verbiage in those agreements that didn't jive with SBA preference or policy. And there was weeks of back and forth negotiation to have those agreements redone to meet SBA policy. So these 4 items are really going to make it easier for clients to apply for SBA financing. And we'll probably be hearing less griping of the SBA process going forward. So before I go to the next slide, I wanted to stop and see if anybody has any questions about these favorable SBA SOP changes. And I can reference SOP because we all know what SOP stands for based on my previous slide, right?
Lee, not that you have to go through every single thing, but that other meeting just let out and there were about 5 or 6 people that just hopped on while you were maybe midway through that slide. Maybe you could just recap those definitions again or those changes again. Sorry.
Absolutely. So yeah, welcome everybody. Lee Kleinman from Business Finance Capital CDC. Nice to see you all. So in the past, an individual could have too much personal liquidity for SBA lending because the government's position was, with all this excess liquidity, you can put 20 or 25 or 30% down and you don't need SBA help. There's no longer the analysis on the personal liquidity side. A business could have too much liquidity, but that's very rare that a business has millions of dollars of cash laying around. So that's going to open up the door for a lot more SBA clients. Regarding background checks, we used to have to get court documents, fingerprints for people that had prior felonies or misdemeanors. As long as they can answer no to this first question here that I'll highlight, we don't need to get any of the court documents or fingerprints going forward. Affiliated entities, this is when an owner owns other businesses or other real estate holding companies. In the past, we had to collect a lot of information on those entities. Now, we only have to do so if the client owns 50% or more of the borrowing business and 50% or more of another business in the same industry as the current borrowing business. So this is going to eliminate a lot of time and paperwork in the clients completing an SBA loan package. And then we no longer have to collect franchise or dealer agreements if the business is a franchise. Many times these agreements would kill a deal because they were worded in a way that didn't jive with SBA policy or preference, and the franchisor wasn't willing to change. And even if the franchisor was willing to change the agreement, it added a week or 2 or 3 of back and forth. So all of these, in my opinion, should eliminate some of the griping that clients have maybe voiced their concerns in the past about applying for an SBA loan. And I'm very happy to share these positive changes with you. Any questions on these SOP changes that went into effect earlier this year? Okay. The next slide, these have been around for years, and these are what I call, existing favorable SOP policies. These have helped me close deals to where without these, obviously the deals would not have closed. So the first one has to do with the fact of certain industries require exterior lot space in addition to building square footage space. It could be a plumbing contractor that has to store trucks and large pipes. Many contractors need lot space, what have you. The client can use lot space in whole or in part to meet the 51% or more owner occupancy requirement. Obviously, we're not counting the regular parking space that's required for clients and employees, but I'll give you an example of a transaction that I closed last year. There was a lot that had a building on it that was leased to a third-party tenant for 3 years. Now, one would think that's an ineligible transaction because the client can't occupy 51% or more of that building within a year of escrow closing. Well, the client needed the excess lot space for his large trucks and his pipes, and the excess lot space was 51% or more of the combined square footage between that lot space and the structure. So we were able to meet the 51% or more owner occupancy requirement by just using the lot space and not a single square footage of the building. And this has helped me close a couple transactions, and I'm glad I joined the CDC, because when I was at Wells Fargo, I didn't know about this, and I wonder how many transactions I lost in the decades of lending at the bank. But I know it now. It's helped me close a couple transactions, and I'm happy to share it with all of you. Does anybody have any questions about this policy? Another way it could come in handy, actually, now that I think about it, is if, let's say, you had a 3-unit industrial building and 2 units were leased out to long-term tenants, and the client wants to occupy one of the buildings at 33%, they can use the outside lot space for the other 18%. No, not for the other 20%. I'm sorry. No, 33, 18%. I was right. So you have 33% owner occupancy from that third industrial unit. And then to get to 51, you can use the 18% could be used or met by using the lot space. So you can split it up that way as well to make a transaction SBA eligible. The bottom one has to do with appraisal shortfalls. One just happened to me 2 days ago. Luckily, they don't happen very often, less than a handful of times a year. But the gist of this policy is the following. If there's up to a 10% appraisal value shortfall, the government does not require additional borrower injection. They're just going to have the lenders be slightly over 90% financing. So what does this mean? Let's say you're buying a building for $1 million and the appraisal comes in at 900. That's exactly a 10% shortfall. So one might think that now the lenders are going to do their 50, 40, 10 structure on the lower of the two, or the 900,000 appraised value. Well, that's not true. We can still do the 50, 40, 10 structure on the $1 million purchase price, and the client does not have to come up with that $100,000 shortfall in the value. Now, this comes in handy when the seller does not want to reduce the price and the buyer is still willing to buy the property. And many times that's the case because sellers are firm, buyers have been looking for a year or two, and they're okay overpaying based on the appraised value. So this comes in handy from time to time. More often than not, the seller will lower the price to meet the value, but in case they don't, we have this in our back pocket to help close the transaction. So any questions on either one of these, what I call favorable SOP policies?
And guys, can I make a suggestion? This is David. Lee, I mean, he's shared a lot of good information, a lot of good updates, but there's a lot to digest. My suggestion, and I kind of do this with Lee and any other, I mean, even conventional, that when the client has a question or wants to run a scenario, I would just set up a call or set up a Zoom and have Lee, you know, just be the one to kind of drive it home and just explain, because he knows the stuff best. You know, don't be the messenger that something gets dropped. You know, when you're getting the message from Lee to the other guy, and then something goes, yeah, not that will happen, but it will go sideways, and then they'll say, wait, David told me so. Well, no, I think it's best that, you know, the way Lee, I mean, he has a great presentation. You can hear he's done many of these, and he does it, I mean, left and right. And I'm not trying to put him on spot. I just think it would be best that you guys have a scenario, you have a client, just set up a call, set up a Zoom, set up a face-to-face, of course.
I agree. There's a lot of... Go on. No, go on, David.
Yeah, sorry, a call came in. Try to, you know, do it there. That would be the best. You agree, Lee?
I do. There's a lot of moving parts in transactions. Is this an expansion location? Is it a rent? I'm sorry. Is it an expansion purchase? Is it a rent replacement purchase? Is it a startup? Are projections needed? Is there construction that is needed that's going to be financed? These are things that need to be hashed out earlier, so we bring in the right people and the right resources to get the transaction done. So that's very good advice, David. Yep.
There you go.
It's,
You know?
yeah, it's just like when you have a construction job at your home or your building, you're gonna hire a general contractor right away.
Mhm.
They're gonna size up the job, and then they're gonna bring in the right subcontractors to get the job done. That's exactly how I look at my job. You know, I kind of look at myself as a project manager per se, and we want to get the key people involved earlier, sooner the better, definitely. Good call. Okay, so no questions here. If not, I'll move on to the next slide. All right, so SBA 504 loan structures. You'll see 3 here. The upper left is for a top tier customer. The upper right is for a middle tier customer. And the bottom is for a lower tier customer. So what does all that mean? All these different tiers. You're like, I didn't know there was tiers in SBA. Well, this is Lee's jargon. In essence, everybody gets the same structure, rates, fees, terms, conditions on the second mortgage portion that I do. You'll see that everybody on all 3 of these scenarios have the same rate and 25-year fixed rate on 1, 2, and 3. So no one ever needs to shop the second mortgage. No matter where you go, it's the same. Where we need to pay close attention to is the first. We can see here for this top tier customer that would qualify for like the Bank of Americas and the Chases. They're getting a 5.75 25-year fixed rate. A middle tier customer would be in the low 7s for just a 10-year fixed. A lower tier customer would be in the upper 7s for just a 5-year fixed. So why am I mentioning all of these different tiers to all of you? Well, I'm going to sound very biased, but I speak from experience in being the first mortgage lender at Wells Fargo and now the second mortgage lender with the CDC. The clients and the referral source, in this case, the referral source would be you as commercial real estate brokers, don't know how the client underwrites. You don't know if your client is middle tier, upper tier, or lower tier because you don't have the spreads, you don't have their financials, you don't have the personal tax returns and business tax returns and all that good stuff that we collect. So my biggest value add in the marketplace is getting involved in the transaction early, collecting the loan package, and then assigning the client to a tier. A worst case scenario is a commercial real estate broker like yourselves met a nice Chase banker at a function that they were sponsoring in the recent past, and you like that banker and you want to send them a customer. And there's absolutely nothing wrong with that. But the risk you run is Chase, we all know, is a top tier lender. What if your customer is middle or lower tier as far as their cash flow ratios, liquidity, what have you, and you're sending a middle or lower tier customer to a top tier bank? Well, that's not the best customer experience when they get turned down. Someone like myself can tell you and the customer, after we review the loan package, what tier the customer fits in, and then I can help guide you and the client to the right lender. Now, I don't have to necessarily choose, let's just say the customer's top tier. I don't have to choose the top tier banker or lender, but I could tell you and the customer ahead of time before you start applying with first mortgage lenders, I've looked at the numbers, they're great. It's a top tier customer, David. Do you know anybody at Chase or B of A or Wells Fargo that you want to send the transaction to? So that way David or any of you can also loop in a first mortgage lender that you want to include in your client's transaction.
Exactly.
And vice versa. You might have a top tier customer that deserves the best rates and fees, and you might send them to a middle or lower tier lender And now this customer that deserves the best rates and fees got introduced to lenders that can't offer them the best rates and fees. So I help guide you and your client to the right first mortgage lender from minute one. And it saves you and the client time from applying at first mortgage lenders that can't do the deal. And from my perspective, it's a better customer experience to start with the CDC for this reason. Doesn't have to be me. There's plenty of CDCs out there. Obviously, I hope it's me. But with 25 years of lending experience, I think this is a really good strategy, again, for the best customer experience. So I'll take a pause and let all of you digest all this and see if there's any questions on this topic. Okay. Let's see, what else do I want to add on this one here? Yeah, the other thing is you could have a top tier customer that only has 1 year of cash flow and that needs to finance construction. Well, some of the top tier lenders require 2 years of cash flow. Some of the top tier lenders require building permits before they'll close the escrow. So that's something else that I help you and your client navigate through. Let's say we have a top tier customer, 1 year of cash flow, $500,000 of finance construction. Well, now I'm going to go find you and your client a top tier lender that only underwrites to 1 year of cash flow and that won't need the building permits before the close of escrow. So as you can see, there's all these moving parts in what makes the right lender the right lender. And again, I, as a CDC, second mortgage loan officer, help steer you and your customer to the right first mortgage lender early in the process. So having said that, I'll share a couple recently closed transactions that I thought were worth mentioning. These both closed escrow earlier this year. The first one is a parking lot in downtown Los Angeles. Granted, it's paved, but it has the same classification as raw land. So raw land is the same as a paved parking lot and vice versa. We'll just call it a land deal. A law firm bought a nearby office building last year with different lenders. I got brought into this transaction as the second mortgage lender for this parking lot purchase. And the government finances land at 90% LTV. I know it's hard to believe, but it's true. We submitted this file with 90% financing. The Government Loan Center in Sacramento, which we all know is called the SLPC, Sacramento Loan Processing Center, they approved it at 90% financing per the SBA SOP, Credit Policy Manual. Now, the loan broker sent the file to a first mortgage lender who only wanted to do 85% financing, and the client was okay with that. So the client ended up putting 15% down. But that's because that was driven by the first mortgage lender. If the client had a first mortgage lender that was willing to go 90 on this, we would have done 90. And I couldn't really control the process because it was a loan broker referred deal. And again, the client was okay with the extra 5% down. If they were not, then I would have assisted the loan broker in finding a new first mortgage lender that would have done the 90 like we did. This is a transaction in San Bernardino. It was made to an existing indoor family fun center that had 3 existing locations. They bought this building as an expansion location. So now they're going to have 4 indoor family fun centers. The purchase price of the building was about 6 and the construction was about 2. So it's an $8 million project, not small. The cash flow from the existing 3 operations did not cover the debt anywhere near for this $8 million project. But the government underwrites to projections to experienced operators. Well, let me back up. we do projections for startups. So I take that back. Anyways, because the government underwrites 2 projections and they were doing well in their other 3 locations, we got it approved, and I helped the customer find a first mortgage lender that would also underwrite 2 projections. And normally with a tough, large deal like this, the client would have to hire a loan broker. But with me as a CDC loan officer that has experience working with all the banks and who has relationships with 20 or 30 different first mortgage lenders, I went shopping for the client as a complimentary courtesy service just to help them. And they did not have to pay tens of thousands of dollars to a loan broker to go find a home for the first mortgage piece. So that's another value add in working with the CDC. For hard to do deals, the client, in my opinion, does not have to pay a loan broker because I will find them a first mortgage home without the client paying a loan broker fee. My contact information, which I think you all have, and I will open it up to any questions about any of these transactions, policy changes, or anything SBA or Lee Kleinman or Business Finance Capital in general.
Anyone have any questions? Okay, we have quite a few people on here, so I thought there'd be at least 1 or 2.
He explained it so well that we don't have any questions.
There you go.
Hey, questions will,
thank you.
listen, questions will come up. We all go, but then, you're speaking to someone, you're cold calling, and the guy will come up with a scenario. And guess what? I need to call. I need to talk to Lee. So just send him a text, call him, and, maybe not now, but I'm sure they'll come up. I mean, it just, I'm sure I get off the phone and say, oh, wait a minute, I forgot to ask Lee about this. So don't be shy. He's reachable. Lee, you gave the cell number on this, right? That you put in? Obviously, yeah, there you go. Very good.
Hey, Lee, I got a question.
Sure.
Going back to that criminal and incarcerated people, just by putting no, that's it. That's all they're gonna do. They're just gonna take that as an answer, or
Yeah. So is the applicant incarcerated, on probation, on parole, or is under indictment for a felony or any crime involving or relating to financial misconduct or a false statement? If yes, applicant is not eligible. If no, applicant can proceed. Whereas in the past, if they had any DUIs, felonies, or misdemeanors, they had to provide, like if it was a misdemeanor or DUI, there's about 10 items they had to provide. If it was a felony, there's about 15 or 20 items they had to provide. So all of that has gone by the wayside. A lot of people, I really get to learn about my clients because we ask all these personal questions about them, because one of the 5 C's of extending credit is character. So lenders care about character and someone's background. In the past, many people that I work with have had a DUI or a misdemeanor. It's not too many felons out there that have come across my desk, but there's a lot of DUIs and misdemeanors. And they had to dig up a lot of documentation. Again, all the court documents. They had to go to the probation department to get proof that they satisfied all of their fines and punishments. They had to provide a letter of explanation, and so on and so on. And, a lot of times people don't have the documents from a case that was 15 years ago or even, 10 years ago. So it's just very streamlined right now, which just makes it a lot easier for clients to apply. Oh, the other thing worth mentioning is that with a 504, we all know there's two lenders, right? We have the bank 50% and me SBA 40. It's very important to realize that everything I'm talking about has to do with the second mortgage. So just because we're okay with all this stuff, like the criminal stuff, doesn't mean the first mortgage lender is. You know, we finance felons. Most middle and top tier banks don't. So keep in mind that I'm speaking about the second mortgage policy, and that's another value in working with the CDC early, is that if some of these issues come up that could be an issue for some of the banks, I will help locate a bank to where this might not, the felony might not be an issue. I have financed a couple of felons since joining the CDC, and the clients, two banks would not do it, and I was able to find a lender that did. So again, for these harder to do deals, you and your client could go knock on 5 or 10 different banks and get turned down 5 or 10 different times because banks decline SBA eligible transactions every second of every day. Just because the bank turns it down doesn't mean it's not SBA eligible, and more importantly, doesn't mean it's not doable. So again, someone like myself helps the client navigate through construction permitting needs, possibly criminal background checks and stuff like that. And then also, how do they underwrite? Are they top, middle, or lower tier? What bank are we going to bring in that aligns with their financial profile or their background, or whether there's construction involved, all that stuff.
Hi Lee, it's Sam.
Hi, Sam.
How are you?
I'm good. How are you?
Great. First time working with you, and I tell you something, my client is super happy with you. He says you are faster than any other lender he's worked with. So I have a question. We had an SBA lender, I believe last year, a year and a half ago. I don't know, David. I believe that, I don't know if he was invited by you or whoever else. He presented us 100% SBA financing. Is there such thing you offer?
So with my program, now keep in mind, there's two programs. There's the 7A and the 504.
Mm-hmm.
And you and the clients should be exposed to both, and the client picks the best one based on their preference. With the 504 that I do, that has this structure, the bank 50 and me 40, the only way to get 100% financing is if the seller is going to carry the 10
I got you.
on my program. I've heard of some 7A lenders coming up with 100% financing, and to be honest with you, I don't know how they do it. I've heard of some bank practice finance divisions coming up with 100% financing for the medical professionals. Not exactly sure how they do it. So maybe that other lender was talking about the 7A program. Very well possible. Keep in mind that the rates and fees are typically higher than the rates and fees on a 504.
Oh yes. No, it was, I think I called him after and he said it was, and that was a year ago, year and a half ago.
Mhm.
It was around like 9%.
Yeah. Now, some of the top tier banks offer a 25-year fixed rate 7A. And depending on where that rate is, you have to also factor in that the 7A fees are almost double than what the 504 is. But I remember at Wells Fargo, the other thing I want to mention is that the index for the 504 first mortgage is different than the index for a fixed rate 7A. And maybe 7, 8 years ago at Wells Fargo, the 7A rates were lower than the 504. And after paying that lower rate for 2 or 3 years, you then caught up to the higher 7A fee, and then you had 22 or 23 years of savings. But then the rate indexes and the all-in interest rate between both programs shifted, and then the 504 had lower rates and lower fees. So I guess it depends on what economic market we're in. You know, if a client's buying a multi-million-dollar building, or any building for that matter, probably multi-million in Southern California, they should be exposed to both programs, and then they can make an educated decision. But from my experience, more often than not, clients do prefer the 504. One of the other nuances with the 7A is that if you only want to put 10% down, you then have to pledge additional collateral. If you don't want to pledge additional collateral, you have to put 15% down plus another 2% to cover the fee. So for no additional collateral on a 7A, you have to put 17% down. On a large purchase, that 7% is hundreds of thousands of dollars. Clients might not want to do that, or might not have the money to do that. And they probably don't want to pledge their house or vacation home for the transaction. So there's that nuance there on the 7A as well. But again, the clients should be exposed to both, and then they can make an educated decision as to which program is best for their purchase goals.
Thank you.
You're very welcome. And Sam, thanks again for the introduction to your client. He's a pleasure to work with. And it just so happens that we grew up on the same neighborhood in Studio City. So we're having fun talking about our days back in Studio City. So
Yes, I heard about that.
very enjoyable client to work with. Thanks again for the introduction.
Thank you.
Anyone else have anything they want to talk to Lee about, ask? Okay. Well, thank you so much, Lee. Is there anything else you wanted to mention to wrap it up?
Yeah, thank you. One more minute, that'd be great.
Sure.
The SBA Loan Center for the 504, the turnaround times are lightning fast right now. Basically, all of this year, the lending decisions have been between 2 and 4 business days. During COVID, when the money was dirt cheap and they were giving out all those pandemic loans and people were flush with cash and low interest rates and buying buildings left and right, the turn time was 2 to 4 weeks. For many months, it was 3 to 4 weeks. Starting this year, the turn time has improved, and it's been, to the best of my recollection, it's been between 2 and 4 business days the entire year. So we can close faster based on that. And, you know, if we're hearing about a bank closing or a bank tightening up, there's plenty of other banks that are funding these first mortgage deals. So there should be no concern about getting a deal done, even in today's environment with recession fears and banks closing like they did earlier this year, and high interest rates. So none of that stuff should stop you and your clientele from pursuing a purchase if that's what they desire to do so. And I'll thank you again for the invitation, Kim, and always great spending time with my extended family at KW Commercial in SoCal. Thank you.
Thank you.
Viva la familia.
Sí, señor.
Yes. Does anybody have any new listings they want to share? And perhaps Lee can also maybe give a comment on it. Of course, if it's a no user play. Anybody has a new listing that want to put out on this meeting? Because we're always looking for obviously exciting inventory. Anything from anyone? Don't be shy. If not, we'll have one of our new listings that's about to go live. Omi, do you want to touch on that? The one that's at Stanford the night? You want to? Please go ahead if you like. And Lee, this, well, I would say that just because we have a couple of them that are more of a long term, when I say long term, it's like 2 years plus or minus, but I think depending on when we close the deal, I mean, it could be an owner user play, but you know, of course, once people look at the rental and how they approach it, but it's a phenomenal location in downtown LA. Go ahead, Omid. Thank you for your patience. Mr. Omid Saleh from DY Corporation team will present Knight and Stanford, a brand new listing. It is a very good size deal, 15.5 million. Hold on one moment, please.
Hey guys, how are you? Oh, I'm sorry. Give me 1 second. Let me put him a spot by David. So, all right. So we've got a prime detail, a retail property. David, go mute. 6 parcels, 3 buildings, corner of 9th and Stanford. Total square footage of the lot is just under an acre. Total square footage of the building is about 35,000 square feet. You are going to be picking this up roughly at about 6.25 cap, at the $15.5 million price point. All the tenants have been there long term, average about 14 years. It's primed as either, you know, as a hold or as a covered land play. You know, it's in today's market, finding something like this in the heart of downtown Los Angeles is not very easy, especially at this cap rate, and the potential this has. If you have any other questions, this is not out yet. This will be out on LoopNet later today, CoStar later today, Crexy, and everywhere. If you do have any questions, please don't hesitate to reach out to David, myself, or Eric. For more information, we can get you that OM immediately. Thank you. Talk to you guys soon.
Omid, which corner is it, may I ask? Anybody?
It's the corner of 9th and Stanford,
No, I know. Is it like southeast, northwest? Which?
southeast corner.
Southeast. Got it. Thank you.
Yeah, you're gonna see the carousel party supply right there at the corner.
Oh, yes, yes.
It's
What is
the-
the zoning?
Zoning on that one is M2.
By the way, the southeast corner is the sexy side. So for ones that know that area, you know what I mean.
If you've ever been down there during the day, it's a crazy area. It's
Yeah,
always busy and people are trying to get you in and out, in and out.
and just go there on the weekend and you'll see what's happening. This is, I think, perfect for an exchange, someone that is looking to, you know, down the road, perhaps maybe utilizes space for themselves. Development also is a, you know, play that they can be looked into. We are waiting for, you know, a couple of architects that are kind of doing their homework to tell us what, you know, you can and you cannot do. But like Omid said, the income on it, it's already over a 6 cap. I'd be surprised we are not able to deliver this, something, I mean, we had 7 cap or damn close to it. Owners are very motivated, you know, they check with us, kind of every, you know, 3-4 days. So, you know, if you got anyone that's looking that price range, definitely put it in front of them. I'm glad to answer any questions that you guys would have. Do we have, do you want to touch on 6811 or are we already touched on that? And again, this is the other one we're just going to touch on for like a minute. Again, an owner user play or investment with added value, or where you can, you know, obviously raise the rent. The tenant's been there for years. This location, 6811 Santa Fe Avenue in Huntington Park. And we actually sold this property to the current client. They have another project that they are in need of the money, and they're looking to sell and take the proceeds and kind of finish their other project. And so they're motivated. We have approximately 16,100 square feet of land, existing building of just shy of about 1,500 square feet. It is currently being utilized as an auto repair, no body work. And, you know, the tenant is on a month-to-month. The owner feels that, you know, if somebody comes in and looks at it as an investment, we can definitely raise the rent, or someone may want to come in and take over, you know, for their own business, or they want to negotiate according to their rate and terms. No matter which way you go, we have flexibility in price. The property shows very well. Anyone that has any questions about a potential development, you can obviously check with City of Huntington Park Planning. And that's the other one that I would like to point out. Again, 6811 Santa Fe Avenue in Huntington Park. Any questions on that? Again, you can contact one of us here at 310-724-8043. Be glad to help put a deal together. And that deal there, again, depending on which way you go, but that would be a Lee Kleinman special. And if it's an owner user, it's a Lee's arena all day long. Okay, so I'll make sure you do speak with Lee about it. Okay, thank you very much.
Omi, can you email me the package on that? The one in downtown?
9th and Stanford?
Yeah,
You
please.
got it, no problem. I'll get it out to you later today.
Thank you.
Does anyone have anything else? Okay. All right, well, thank you again, David. Thank you for leading the way. And Lee, thank you so much for your presentation.
Thank you.
Kim, thank you for all your assistance at all time. I mean, we really a round of applause for Kim Jordan.
No, thank you. Thank you for your support. And I'll
Really,
send out a
seriously.
recording of this presentation. I know some of you hopped on a little late, so I'll send that out today or tomorrow so that you can have it.
Kim, I had a question for you. I was at the Austin get-together. Unfortunately, with all the flight, delays and cancellations, I was just there for like half a day. It was very interesting. I was listening to a few people. Are we able to get the recording on that Austin get-together, the commercial summit from last week, the last weekend? Are people able to get that, or?
I'm not sure about that, but that's definitely something I can check into.
Yeah.
I know for on the other side, this last weekend they had the mega agent camp. They don't
That's right.
usually produce, they don't usually release the recordings of any of the speakers or anything, at least not for a time being, maybe like 2 or 3 weeks, and then only maybe clips of it. So, but we'll see. We'll see what we can find out.
Great information. The ones that I listened to, I mean, I was just there really brief, but everyone should, it just confirms what's going on in the world and the market and all this and that. I mean, great agents from different parts of the country. So, all right.
Awesome.
Thank you.
Okay. Thank you, everyone. Have a great day.
We do have a get. I just want to touch on this,
Oh,
guys.
yeah.
Real quick. We have a networking / a good cause, and the email went out. I know people to get my email. City of Hope, I'm part of it. It means a lot to me, and of course the other members are involved. City of Hope, we're having a networking mixer this coming Thursday at the W Hotel in Westwood, very close to UCLA. It starts about 7 o'clock, goes till 10. There'll be, food and a little bit of entertainment. We will have a doctor that is going to kind of touch base on the latest, obviously his studies. And what this is for is we raise money to fight cancer. Unfortunately, we all have been affected some way, either with a friend, family, and because I personally have been affected. And this is a very important cause for me. And I am helping out, and would love to see anyone that wants to attend, no problem. We will be at the outdoor by the pool area. You just want to get your tickets ahead of time. It will be at a much lower price, and you can of course pay when you come the day of. But it is a great event, good cause, great networking, and when you get there, you'll understand. If any questions, feel free to give me a call on that, or check out the email, and I can help you to attend. Thank you very much.
Thank you, David.
All right.
Thank you, everyone.